So technological advancements and the digital era has seen the rise of many things we couldn't imagine. Cryptocurrencies, which are digital or virtual currencies, are now a popular commodity and mediums of exchange. Today we'll be focusing on one cryptocurrency, that is the Bitcoin, with Rufas Kamau. Rufas is a finance expert and a lead market analyst at FX, which is a financial markets brokerage firm that's regulated by the SMA. Welcome back, Rufas. Glad to have you here tonight.
Thank you.
I hope I hope you did your introduction justice. So we can just move on, yeah?
One correction though.
Yeah.
I work with FX, which is a financial markets broker that is licensed by the Capital Markets Authority.
Oh, okay, perfect. Now, let's just dive right into a discussion of the night. So briefly explain to us what is Bitcoin and how does it work?
So when we talk of Bitcoin, it's a very simple and easy to use currency. So it's an innovation that happened back in the year 2009 by an anonymous entity. We don't know whether it's one person or many people, but they called themselves Satoshi. So it's basically a peer-to-peer electronic cash system that allows you to send and receive value without having to trust an intermediary. So for a majority of the transactions that we do digitally, there is always a need to trust an intermediary. For instance, if I send you some money via M-Pesa, then I have to trust the intermediary. In this case, will be Safaricom. So if I have to send you some money via bank, then I have to trust the bank. But then with Bitcoin, you don't have to trust anyone, and therefore it ensures the security and also the freedom to transact between one person and another.
Now, you have mentioned the security of these Bitcoins. Unlike currencies like the Kenya shilling, which is under regulation of the CBK, Bitcoins don't have a regulatory authority and they are not traded by banks. So how safe are these currencies really?
When you talk about Bitcoin, it's secured by what we call blockchain. And this is basically a public ledger. It's a digital ledger that is supported by the people who support the Bitcoin network, or what you call the miners. So we have the people running their own copy of the ledger around the world. So whenever you send a transaction from one person to another, then it's supported by this ledger. So it makes it the most secure monetary system. But then when it comes to your own personal Bitcoin, let's say you have some Bitcoin on the network, then you will have your own keys that enable you to sign transactions. And this basically gives you the responsibility of keeping your Bitcoin secure. So what this means is a very similar idea with holding cash. So whenever you have your own cash in the pocket or at home, then it's very similar with the way you hold Bitcoin. So if you expose your cash to other people, then it can get stolen. So the same case applies to Bitcoin. So if your keys are exposed to other people, then of course they can get stolen. So there's a personal responsibility for people to protect their currencies, and the same case applies for Bitcoin.
Now, stability of a currency is one critical aspect when considering to use it as a medium of exchange. The Bitcoin, however, has over the years shown it has a high volatility. So in this regard, what would make one choose it over stable currencies like the US dollar?
So when you compare Bitcoin with traditional currencies, Bitcoin is very young. Since it was started back in 2009, this is the 14th year we are having Bitcoin. When you compare the same with fiat currencies such as the US dollar, the UK pound, we know that they have been around for much time. So it's a new technology that is getting wider and wider adoption. And being a very new technology, then it's exposed to higher volatility. However, when you zoom out and look at the longer term, there is what we call a predictable monetary system. So when you look at the monetary policy in Bitcoin and you compare the same with the central banks, then you would realize that the monetary base that is offered by central banks, such as the Federal Reserve Bank of the US, keeps on expanding, increasing the supply of currency. And this happens over and over again, which ensures a longer term depreciation of the currency over time. So if you look at how much, let's say $100 was buying 20, 30 years ago, that amount of goods or services has gone down, and right now you can buy a very small percentage of the same. The same case applies to Kenya shilling. If you look way back, let's say 30, 40 years from now, the Kenya shilling was having a very strong purchasing power. But since the central bank has been increasing the monetary base year over year over year, then you realize that the same amount of money cannot buy as much products or services in the market. So what this means is that if you're using a fiat currency as a long-term way of storing value, then you are assured that you're going to lose it value over time, since the central banks can't avoid the temptation of increasing monetary base. So the Bitcoin comes with a different policy that is limited to only 21 million coins. So there will never be more than 2 million coins. The rate at which the Bitcoins are mined by the people who support the network is also very predictable. So if you store your value in Bitcoin for a long term, let's say 4, 5, 10 years, then you are guaranteed that your value will stay there.
All right, now Bitcoin, you have mentioned that Bitcoin is indeed very young. So Kenya was ranked the leading in Africa and fourth in the world in terms of cryptocurrency ownership. This was in mid last year by reports published by the UN. So what could be attributed to this high cryptocurrency uptake of 8.5% of the Kenyan population?
There's quite a number of factors that would answer that question. Apologies for this. I'm still having a flu, so apologies. So one thing is that Kenya has been on the front line in terms of digitization. We have easy access to electricity, smartphones, and we have a very educated or literate population. The other thing is age. We have a very large number of young people. And in addition to this, we know that Kenya as an economy has been facing a big challenge in terms of creation of jobs. So if the economy is not expanding at the same rate as the population, then you find that a majority of the young people graduating from colleges and universities don't find ready jobs in the market. So as a result of this, we have seen a lot of young people take on online jobs. And one of the problems they have been facing is having to trust a third party to process their payments. So there is a very large number of Kenyans that have had challenges with PayPal. Sometimes the rate that they were being charged to transfer money from abroad to Kenya was very high. And some other times, the PayPal would just freeze their accounts without notice. Then it would take a very long time to solve the cases. So they were looking for ways to transfer value directly from where they are creating it to Kenya, and Bitcoin came in as an easy solution. So on top of this, we have seen a big uptake in online investments. So there is a lot of Kenyans that are looking outside there to make investments out there. This includes investing in Bitcoin, other cryptocurrencies, investing in foreign stocks, indices, and so on. And one of the easiest ways they have found is using cryptocurrencies, Bitcoin being one of them.
All right, now, Rufas, there is disadvantages to everything. Now, what are the pros and cons of Bitcoin?
Yes. So the first thing is that Bitcoin being a relatively new technology that is used to send and receive value as well as to store, a lot of hackers find it very interesting to target people who don't have knowledge about how to use Bitcoin, how to store their Bitcoin safely. So it can be a very easy way to exploit you if you're not careful. So another thing is that if you are just getting into the system, there's also a large number of scammers around the world who will target unsuspecting beginners who are looking to, let's say, learn and get to understand this technology. So they find themselves being victims of hackers as well as bad players in the space.
Now, you have mentioned hackers. Hackers can easily access Bitcoin. So cryptocurrencies are unregulated and they can be easily used to carry out fraudulent transactions. How can this be counted, and maybe what needs to be done to curb such cases?
So when it comes to hacking, I would like to clarify this. Bitcoin is one of the networks that have never been hacked since inception. So it's very secure. But then from the client side, if you don't take the necessary precautions, remember I mentioned you'll have your own private key, which allows you to sign transactions. So if that key is exposed, then you can lose your Bitcoin. So hackers will target your site rather than targeting the network. So in terms of regulation, Bitcoin was designed to be regulation proof. So in a way that it is purely decentralized. So by being decentralized, it means that there is no single point of failure. So unlike other cryptocurrencies out there that have a central team backing the coin, maybe controlling the blockchain, for Bitcoin, there is no central. So it makes it a pretty secure chain. We saw it happening, I think, last year when we saw some Canadian trackers testing the COVID-19 restrictions, and the government tried to ban the transactions in Bitcoin, but somehow it could not access those wallets. So it made it a very secure way for people to express themselves and also to protect their rights. So even if the government of any country was trying to, let's say, block access, some activities such as some people who are trying to riot or oppose a government incentive, then they were able to transact without getting banned.
Now, in Kenya, Bitcoins and cryptos in general have been used as an investment option, I beg your pardon, especially among the youth. So are Bitcoins a good way to invest money and get returns?
Yes. So I would say yes and no. One of the key things we've mentioned today is that the price of Bitcoin tends to be very volatile. So if you are trading or let's say investing in Bitcoin for the short run, there is a good chance that you might buy Bitcoin today and then tomorrow it's down a significant percentage, and that would be very well for you as an investor. However, on the long run, if you look at the continued adoption and growth of Bitcoin, then there's a very predictable cycle of adoption, the halving cycles. So it's a very good way for investing. But on the short run, if you don't know what you're doing, there's a good chance you lose.
All right, now the IMF in December last year had reported that cryptocurrencies could generate risks in emerging economies as it recommended regulation of the crypto market. So what is currently the situation and what do you foresee in terms of regulation of these currencies, which include Bitcoins?
So when you look at the crypto market is so wide. So Bitcoin being the first cryptocurrency led to the innovation of other cryptocurrencies that were much more centralized. So remember, I gave a distinction that Bitcoin is decentralized. So we saw the rise of Ethereum, Binance Coin, among many other coins. And most of these coins tend to pass what you call the Harvey test. So the Harvey test is basically a jurisdiction case in the US that basically describes what financial security is. So in a simple terms, we talk about financial security. It involves a common entity where investors put in their money, and then these investors will expect a reasonable profit from that investment out of the activity of others. So some of these like exchanges such as Binance, we have seen FTX, which collapsed later last year. They tend to qualify for that, and it's very important that these financial companies get regulated and the necessary licensing so that investors can be protected in those areas. So yes, it's very important that some of these cryptocurrencies that tend to pass the Harvey test or their coins or tokens that they offer qualify as securities, they get the necessary licensing and operate within the legal boundaries.
Now, Rufus, before we let you go, for someone considering to use the Bitcoins, how do they get started?
So the first things first is to get educated. You never want to invest in something you have no idea what it is. So I would advise that you go through some find free online content Bitcoin. You could do podcasts on YouTube, get a lot of information, as well as read books, such as we have what we call a book from Safe Dean called The Bitcoin Standard. It's really good. So there's more books out there. I wouldn't want to recommend a lot of them. So once you understand what you are doing, then you basically find a way to store your Bitcoin. This would be a mobile application that you call a wallet or a physical device, such as what we call a ledger. And then you need to find a market where Bitcoin is sold, such as an exchange like Binance. So once you get to the exchange, buy some Bitcoin and then transfer that Bitcoin to your wallet and hold onto your Bitcoin, make sure that it's as secure as possible. On the other hand, if you like to participate in Bitcoin by security for the price movement, then there's a regulated space for that. You can trade what's called a CFD product or a derivative product with FX Pesa. You'll be able to speculate on the price movement and get benefit from the changes in price.
Now, thank you so much, Rufas, once again for making time for us tonight. That is Rufas Kamau, a finance expert. Rufas is also a research analyst, a lead market analyst at FX Pesa. I bet he has talked about that. So we are taking another short break at this particular point. We're coming back with more stories. Stay with us.